The information provided in this podcast is for educational and informational purposes only and should not be construed as investment advice. We are not financial advisors, and nothing discussed on this podcast should be considered a recommendation to buy, sell, or hold any security. All opinions expressed are those of the hosts and guests and are subject to change without notice. Listeners should do their own research and consult with a qualified financial advisor before making any investment decisions. Investing involves risk, including the potential loss of principal. Past performance is not indicative of future results. All right. Hello, everybody. Welcome to the Value Seville podcast, live today from Charlottesville, Virginia. You might not believe this, but we're all actually in the same house right now. We tried to do this recording all at a table, and it turns out getting microphone streams to work in closed capacity requires an expertise that we have not developed yet. But anyway, Shawn O'Malley, our guest today, Donnie, my co-host. Good to see you, gentlemen. Let's start with this. So, Shawn, you've been an attendee of Value Seville. I think was this year your first year, or was this your second year? I can't remember.
2 years.
2 years in a row. Okay, perfect. Let's start today. I know we're going to talk about Uber, and I think that's going to be a lot of fun. But maybe real quick, if our audience doesn't know kind of your background and what you have going, maybe quick introduction would be great. Talk about your podcast and kind of maybe lay out the table for us before we dive into to Uber.
Yeah. So, my name is Shawn O'Malley. I work with the Investors Podcast Network. Been there for 3 years. We are actually the largest stock investing focused podcast company in the world. Over 150 million podcast downloads. For the last 9 months, I've hosted a show that's a kind of a subsidiary called the Intrinsic Value Podcast. I have a wonderful co-host named Daniel Monka. Basically, the idea is every week we alternate between covering a different company. And the pitch for it is condensing the first 40 hours of the research process into a 60 to 90 minute podcast, basically just to help anybody get up to speed on whatever company of the day that we're talking about is. And so in the last 10 months, we're now working on our, I think, almost 50th episode that we're in the process of researching and planning for. So we've built out this really cool archive of companies that we, obviously we work through the fundamentals and kind of qualitative aspect of the story. And then we'll also, with every episode, go through the valuation. And actually, there's kind of a progression to it week to week, where we are simulating with a paper portfolio, actually like starting with $1 million in cash, and allocating it over the course of the show every week. And so people like to keep track of whether we end up deciding to invest in a company or not to invest in it. And then actually we have a portfolio that we share in our newsletter that people like to keep up with week to week to see how it changes and evolves. So yeah, I mean, we've covered 50 companies and we've invested in 10. So, we do try to be selective about it, and not every company we cover on the show we end up falling in love with.
Right. Well, if you look at 100 companies, you're not gonna find 60 you like, right? Not if you're doing good work.
Yeah.
Okay. Well, there are a lot of companies that you could have brought today to pitch, right? I mean, you've done a lot of work. There's a lot of, I'm sure, ones in the hopper that are very interesting. But when we reached out, you were talking, you wanted to talk Uber. So I know Donnie and I have, we've done I won't say nearly of a deep dive as you have, but kind of we've looked at it and kind of have the questions that we'd want to ask, before we'd invest in it. But kind of maybe at a high level, like 10,000 feet, whatever. What drew you to the company as an idea to even start digging into? And then when you started looking at it, kind of what was your approach like in terms of kind of distilling, the business down from high level value creation all the way maybe to unit economics, which I know have improved a lot over the last 2 years, especially. Kind of what was your approach when you started digging into it? And, maybe kind of into some of the conclusions that you've come up with.
Yeah, so it's funny. I was actually very reluctant to cover Uber because I had all these stigmas and kind of stereotypes against it, that the company is a cash burner, it'll never be profitable. From a unit economic perspective, it's a terrible business. And then that's not even to talk about the kind of terminal value concerns with autonomous vehicles and how people kind of see it as a foregone conclusion that Uber's business is going to be disrupted by the Waymos and Teslas of the world. I think if you went and asked kind of a random sampling of people on the street, the median person would say, I think Uber is not here for the long term because of these AV companies and not really fully understanding how that could actually be a tailwind for Uber, which obviously we'll talk more about today. But I have this joke on my podcast that sometimes I literally just stare at my phone and look at the apps I use
Hmm.
to inform what companies I should be talking about on the show and basically digging deeper into it. And not to say that we invest in every company that, that we personally have a connection with, but really, it is taking some inspiration from Peter Lynch, and using, for a retail investor like me, using my customer insights as like potentially a source of alpha, and or at the very least, it helps me manage my emotions and conviction in a company if I know that I truly get a ton of value out of the service. And so Uber was one of those where I had all these stigmas around about the company that were swirling around in my head, saying it was a bad investment, bad investment, bad investment. But I was thinking, I was like, every time I go to a city, what do? I order an Uber from the airport. After a night out with friends, I'm ordering an Uber. And, this is a service that has fundamentally changed my life for the better. And at the very least, it deserves some attention that I would be curious to better understand how it works. So that was the initial thought process of I really didn't think that when we covered it on the show, I didn't think it was a company I was expecting to like. And I came in actually with this very strong bias against the business. Um, and so I think that's part of the reason why I'm so keen to talk about it, because one, it's just a great kind of learning lesson of, fact checking your perceptions versus like actually honestly looking at something with sober eyes, and really trying to faithfully understand what is
Hmm.
actually happening with the business. And then also, yeah, like I said, relying on those consumer insights. I'm not an expert in semiconductors. I'm not an expert on the banking system. In terms of the informational advantage that I could have with valuing those types of company, it's very, very slim. But if there's a service like Uber where I've done the investment work, and then as a consumer, I fundamentally can say I genuinely rely on this service. That has not changed. And if Mr. Market is having a panic about something that is really kind of unrelated to the actual business. So, for example, when I first invested in Uber, it was during the tariff panic in April. And this is not rocket science, right? You're sitting here saying, "Oh, I've actually gotten very comfortable with the fundamentals of the business. I feel very good about the business and when to own it long term." And in terms of an entry point, you know, what do tariffs really have to do with Uber? I mean, you could come up with all these worst case second and third order effects, but it was a great moment where I was just like, as a consumer, I know that my relationship with this product hasn't changed because of the fear of tariffs. And kind of very simple thinking, like their business is going to be less affected than others. And if I can get Uber at $62 a share instead of 75, which is where it was trading at the time, I'm going to happily take that as an entry point. And then since then it's run up to the mid 90s, and has been a pretty good investment.
Right, right. Well, I'll say this, and Donnie, I know you're going to get involved here. One of the first things, like a quick hack I like to do when I look at a business is really ask an honest question, which is, if this business were to disappear tomorrow, would people really care, right? I mean, and I've seen lots of businesses where if somebody waved a magic wand and they went away, most people would give two shits, right? I mean, there are businesses like that, but to me, if Uber went away tomorrow, it'd be terrible, right? For all the people that depend on it. And one of the things I think you mentioned in your podcast on it, I mean, just from a safety perspective, because we all know, one of the things, I find it's funny. I talked to my dad about when like his generation was younger and in college, people would go out and drink and drive a lot more often because there really was no other choice unless you wanted to spend the night in your car or something. And so a lot of people from the baby boomer generation, there was a lot of drinking and driving that went on. And I mean, you look at the history of Mothers Against Drunk Drivers in the 80s, and if you think about what Uber has done, I don't know anybody, honestly, in any network I'm a part of that ever gets behind the wheel of a car after having even one or two drinks, because they just grab an Uber. And that is, just from a societal perspective, and you talked about this, such a benefit to society. And so immediately when I look at Uber, before we even get into the unit economics, and I think you have some more data on this, I mean, I really do believe it is a wonderful service that if it went away tomorrow would not be good for anybody. And so that first box, like, should I dig into this company and understand how that value creation translates into economics that hopefully will translate into shareholder value creation over time. But at least that first box to me is got double check mark in it. But maybe if you want to elaborate a little bit more, I mean, you had some stats in your podcast about just the safety benefit of Uber preventing, I think, not only drunk driving, but just general accidents in general is pretty
Yeah.
phenomenal, right?
Yeah, I mean, you're talking about since like 2017, you're talking about millions of crashes avoided and potentially tens of thousands, if not hundreds of thousands of lives saved. So there very much is a societal value. And then, to the previous point on the, the value that's created from a customer perspective, and why I like to use my own insights as a customer to at least inform or kind of directionally guide what I look at more seriously as an investor is yeah, like I said, or as you said, this is a service that my life has materially improved because of, and would be worse without. And so
Right.
that kind of thing is really interesting to me, and stands out. I mean, I can't even imagine not having Uber anymore. And obviously there is the competitor there with Lyft. And so, Uber has done some really interesting things because, fundamentally there's not really a reason to have brand loyalty specifically to Uber. It's not like they have like a secret formula for their Coca-Cola or for their cheeseburgers that people prefer over the other. Ride hailing is somewhat of a fungible service inherently. And it really does boil down to those unit economics that you talked about of basically, a lot of what the Uber management team talks about is the time cost and the financial cost of minimizing the wait times such that, how can I open up the order app and order an Uber and it'll be at my doorstep in less than 5 minutes. And then also maximizing the savings that are returned to customers of how can I get somebody at my doorstep to pick me up in 5 minutes and also not pay $100 for that.
Right.
And that's where you get into a question of the scale that makes Uber so special, because for a long time, it did look like a terrible business and it was a cash burner. And I think, kind of funny enough, you could actually say that is somewhat of a moat, is because it took Uber, I mean, what, over 12 years of trying to build their business and just burning billions and billions and billions of dollars in cash, that you actually have to almost be crazy to try and do that again from scratch if you were, a competitor entering the market today, just because it is such a cost intensive business and it requires such a ridiculous amount of scale for the unit economics to work out, where you're spreading all the overhead and R&D out across such a large gross booking value base,
Right.
that then otherwise it's not going to be economical, of where, if you want people to actually order a ride, you have to subsidize the cost of it. Otherwise, it's going to be, $100 for a 20-minute ride, and the economics just don't make sense. And so they've now, what I think is so interesting is that the virtuous cycle of the flywheel is really spinning in their favor. For the first time in the last year or so, they've reached gap profitability, and so now this is a business that can use its scale to continue to pad the economics of it. And we're going to really see how much the operating leverage of Uber can truly be as it continues to grow. I mean, it's pretty incredible. The core, if you would ask me whether the core ride hailing business was still growing 20% year over year, I would say absolutely not. But even in markets like North America and Europe, 10, 15, 20% year over year growth. So even in developed core markets, Uber's bread and butter business continues to grow incredibly fast. And that's what really excites me about it, is you have this opportunity where as the business scales, Uber can get more profitable. And then
Right.
at the same time, they can return some of those profits back to customers and drivers, such that as the business scales, drivers earn more, customers pay less, and Uber's profit continues to expand, which almost sounds too good to be true, but that really is scaled economies shared.
I've got a
Yeah,
questions around unit economics, but
yeah.
I'm going to
But
shut
just
up.
before we get into that, I think just going, if you go back in time, to like the original Uber thesis, right? I think it was Bill Gurley who laid out the concept of the network effect. And this was like a decade ago plus, right? I mean, this was a very long time ago. And it seems that that latent network value is starting to show up in the numbers today.
Yeah.
And it's kind of remarkable. I guess it's what's strange is Lyft and Uber. If I, just I had not dug into Uber before we started talking, and I see this wide disparity between Lyft and Uber, and I was really shocked because again, I hadn't spent a lot of time on that. But why is there such a wide disparity between these two companies today as it stands? Is it just that network effect, or is there other things going on that have helped kind of widen the lead for Uber?
Yeah, so like I said, I think you have to, in this business, reach a certain scale for the unit economics to be even close to profitable. And so part of the reason I say Uber has a moat is because almost nobody else would be willing to burn cash
Mhm.
for as long as they did to gain the market share that they gained that gives them the scale they need to be profitable. And so when you look at Lyft, you just think about it, it's just a smaller network effect, right? So as a two-sided marketplace, Uber is competing for the attention of drivers and trying to make this be the most economical use of their time, right? I mean, in theory, they could do any other job in the world, or at a minimum, they could be driving for Lyft instead. So how do you have a service that is both attracting customers and attracting drivers and driving that two-sided marketplace effect such that there's more supply, which means there's more availability of rides, which makes the rides more convenient, more affordable, and then that is a better experience for customers. And then, the fastest, most cost reliable or lowest cost service is going to be the one that attracts more customers to it. And then as there's more demand, that's going to attract more supply, more drivers saying, well, every time I log into Lyft, it takes me 6 minutes to get an order. But when I log into Uber, it takes me 4 minutes. And then you multiply that times thousands, if not millions, of drivers who are doing these simple calculations in real time. It's not that they fundamentally like Uber or Lyft more just because of the branding, but it's purely a business decision of like, well, Uber has 70% market share in the US, Lyft has 30%. And so if you basically, it doesn't exactly come out to Uber is twice as fast to get a ride every time you come on. But if the difference is, you clock on as a Lyft driver and an Uber driver at the same time, and like I said, it takes you 7 minutes to get a Lyft called and 4 minutes to get an Uber, you're going to just continue to drive for Uber and the network that's driving more business to you. And then, like I said, that continues to compound. If other drivers realize that they do that same equation, and then on the margins, they start to drive on one network more, and then that makes the network more reliable, and there's more supply to balance out with demand, and then that reduces costs for customers. And so, like I said, you have these kind of multi-pronged flywheels that are like continuing to compound in the business's favor. So it's incredibly disadvantageous to have the smaller scale. And so actually what's really interesting is now they've gotten to a point of scale with Uber's business of that they can profitably undercut Lyft on cost. Let's say, for the exact same trip, Lyft would charge $12 and lose money. It would be an unprofitable trip for them. Uber is at a scale where they can basically say, all right, we're going to charge $11.50 the same trip to attract more customers onto our platform. And then actually it'll be maybe marginally profitable, not as profitable as it could be, but we can actually do that profitably. And then so that's how you see Uber is actually continuing to take market share from Lyft over time, is because now Uber is basically, like I said, undercutting Lyft on their own pricing. And there's really nothing, you've seen Lyft do a partnership with DoorDash, and there's some interesting stuff going on there. But generally speaking, just in ride hailing, and there's almost nothing they can do about that without continuing to just burn more cash on promotions, hoping to try and temporarily steal market share from Uber that then improves the unit economics long term. But really, I think Lyft is kind of destined to just continue to lose market share and burn cash because they haven't really been able to get to a scale that allows them to be profitable. And then, like I said, because Uber beat them to that scale, there really is, more so than a lot of industries, there's truly a first mover advantage here. If you can get the scale first, then like I said, you can profitably underwrite prices that are below your competition. And that's a huge competitive advantage that continues to compound that customer loyalty and then continues to attract more drivers onto the network, like I said, where really all the action is. And that just makes the product better for both sides of the marketplace.
So yeah, I think using your consumer analogy and it's a great way to, I think, view things because it's what do I do, and especially too having young kids, I find a lot of value in figuring out what they look at. But I generally just pick up Uber and Lyft at the same time, right? And I don't know how much I differentiate between the two, just because on the time estimate side, I think that's always a guess, but the price is never a guess. I mean, the price, you're getting an exact number. But I don't take it enough, I guess, to truly A/B test to understand if one is a better
So I
price than the other.
Before I was even looking at Uber as an investment, I mean, I recall again, just as a consumer, and this is how I use my consumer insights to try to at least guide me as an investor. I remember a number of times in downtown Charlottesville, coming from maybe the Fitzroy, Jeff will know it. It's a popular bar in town. Standing at the corner, and I would see, okay, Lyft is $9, Uber's $11. Let's say I'm going to order Lyft, and then I would wait there, and I would wait there, and I'd wait there. I would say 6 minutes away. Actually, just kidding, 10 minutes away. Actually, just kidding, 15 minutes away. And actually, the driver never came. And then you have to reorder. And so I think I had that at least happen to me 3 times. And so I remember thinking like, okay, well, there's like, this is a false price. because now I'm just paying with my time, right? I'm waiting longer, and that is a very real cost. And so, there's some marketing gimmicks and promos where, Lyft is trying to make the service look cheaper. But fundamentally, if you're stacking that on top of a network that just can't support supply and demand in the same way and balance it out, basically the market never clears. And then you get these situations where you're standing on the corner for 20 minutes and you say, if that's you might have one really bad customer experience with Lyft, and then you turn around, you open the Uber app, the ride's there in 3 minutes. And like I said, actually Uber is now, undercutting Lyft on price. But even if you're paying a premium for that reliability and consistency of knowing this will work, I will get picked up on the timeline, exactly 7 minutes. I mean, I'm not a logistics expert, but you can imagine how incredibly complex it is to try to model in real time, and set expectations appropriately of, hey, this driver will be on your doorstep in 7 minutes to the dot. And being able to consistently hit those thresholds, that really does underpin that kind of consistency underpins what is now starting to be the brand strength of Uber. Because like I said, ride hailing is fungible, but consistency and reliability and trustworthiness is not fungible. And we very much see Uber differentiate itself on that regard. And the other thing that they're trying to do is they are trying to manufacture customer loyalty, right? So they have the Uber One program. And so this is like a monthly subscription, kind of like Dash Pass or like Netflix or whatever it is. It's $10 a month. And I forget, you get free delivery on Uber Eats, which is one of the things I find really interesting about Uber, is that they're leveraging these two businesses to complement each other, and actually effectively lower their customer acquisition costs, because they're sending promos to people who use Uber Eats but maybe use Lyft for ride hailing, or people who use Uber for ride hailing but do DoorDash for a food delivery. Basically, they're taking people that have one relationship with one set of their two main products and trying to cross-sell them on the other one. And that ends up being much more effective marketing than just, buying a bunch of Super Bowl ads. And so point being, they're trying to encourage people to use both platforms and use them more frequently. And that is really what the kind of the Uber One membership, it's like an Amazon Prime, obviously not nearly the same value, but the idea is similar of kind of manufacturing loyalty to otherwise fungible services by returning a lot of those scale benefits to the customer. And you get free Uber Eats delivery, so no service fee on your food deliveries. I think they do 6% credits back on your Uber, mobility, the ride hailing orders. So, for every time you order an Uber, if you're a frequent traveler, getting 6% credit back on that is hugely valuable. And they have some other benefits that they layer in too as well. Just trying to incentivize people not only to pay the subscription costs, which, adds this chunk of recurring, more reliable revenue for Uber as a business, improves the quality of Uber's earnings. But also, like I said, the members of Uber One are dramatically better customers, because they say, oh yeah, I'll start using Uber Eats, because if I get Uber One, then I'm getting a discount on my Uber rides, and I'm getting free delivery, whereas every time I use DoorDash, I'm paying for delivery. And those kind of things really, like I said, manufacture loyalty that fundamentally changes people's relationship with the company, using Uber more, then using Uber Eats more than they otherwise would. Yeah, it ends up being this win-win where they're expanding into a larger addressable market over time, and their cohorts of customers are becoming more loyal and using their services more over time too, as they continue to return more value through these like membership programs, for example.
So Shawn, real quick, to put a fine point on the unit economics, I did some analysis this morning. I pulled up a Canalys model and was able to pull out all the relevant items. But to give you an idea, for those of you listening that haven't looked into it, I'm just going back to 2017, and total trips for Uber in 2017 were about 3.7 billion trips. And we can go through all the expense items, but on a per trip basis in 2017, they lost a little over $1 per trip, right? That's kind of the burn phase, and they continued to burn. The burn improved, but the magic number to me, it looks around in 2023, they kind of hit almost 9.5 billion trips, and they started to get positive operating profit per trip at 12 cents. And then as of last year, I think they did 11.2 billion trips, and now they're earning a quarter per trip positive. So it's like a 2 or 3% margin. So here's a couple questions. So you can, if you lay the unit economics out, you can really see how it's scaled, right? Everything from the operations and support costs per trip. I mean, just looking at that as an example, that used to be 17% of rideshare revenue. Now it's like 6%. Right.
Mm-hmm.
R&D, another one, was 15%. Now it's 7%. I mean, you can, if you chart these items, these fixed cost items, you can see how they scale. Now, what doesn't scale, cost of goods sold per trip has actually come up. And I think my understanding, a lot of that cost, well, there's a couple things going on there. One, I believe in the UK, they have to report on a gross basis, not net. So they actually have some driver costs in that number, is my understanding. But the insurance component is a big part of that cost of goods sold. So here's a question. Is it correct? Uber, do they effectively self-insure, or do they have captive insurance? Do you know? And how do you view that line item? Because that line item's not going to scale like everything else has been. So how do you view right now, if they're earning a quarter per trip, two things, I guess. One, where do you see total trips going over the next 5 years? I think it was a little over 11 billion, as I said. And two, where do you think that operating profit per trip can get? I mean, are we just now starting to see what inflection looks like? I mean, can they start earning $1 or more on a per trip basis? I mean, how do you see the future trajectory, I guess, of those unit economics? And how do you think about that kind of vis-a-vis, valuation?
Yeah, well, great questions. I would say first to the subsidiary or insurance question. Yeah, they do have a captive subsidiary that provides insurance. And so essentially the way it works, which is interesting, is 70% of the company's cost of goods sold goes to paying drivers, which is obviously variable cost, and also vehicle insurance.
Mhm.
I will say quickly, it's actually very interesting that they're not required to provide insurance for Uber drivers on their vehicles while they're driving for Uber in every country they operate in. It's actually primarily the US that has that requirement. So
Okay.
that very bulky insurance cost
Right.
is mainly being manifested in the US. And so, why did that get so thrown out of whack in, 2023? I think as you all know, there's a shortage of vehicles during the pandemic. Supply chains got messed up, and basically, used vehicle prices went off the charts. And so when the underlying value of the vehicles is spiking, obviously the insurance rates correspondingly spike on it too, right? Because you're insuring a more valuable asset in dollar terms. So there were these like serious, I think we can say now, like relatively temporary disruptions that were born out of the pandemic that massively influenced their insurance costs. And by all measures, as I've heard from management, is they've seen a dramatic normalization in that. So it's always hard to say how insurance costs will scale, but I do feel like that kind of spike we saw was clearly related to COVID and a bit of an abnormality. And more interesting to me though is the Uber is increasingly expanding internationally and outside of the U.S. And I feel like for anybody who's ever looked into these kind of companies before, like Amazon, Spotify, basically the core developed market that the company started in. So let's just say Spotify, for example, their average revenue per user or subscriber will be highest in that market. So for Spotify in Sweden, they earn like 30% more per user than the US, and then the US earns, almost like an order of magnitude more revenue per user than some of the emerging markets. And what's interesting with Uber is that because in a lot of these other countries it operates in, they're not required to provide insurance for drivers while they're operating on the Uber network. It's actually from a unit economic perspective, it's more profitable for them to scale their business in Latin America, South Asia, the Middle East. And that is really not common, right? Like I said with Spotify, the membership prices, the monthly subscription cost, it might be $2 in India, or it might be like 50 cents in India versus 10, 15, $20 in the US for the same, the cost to provide the same service. So a lot of the times this marginal emerging market growth comes and it actually is dilutive of the unit economics of the business. And like I said, with Uber, it's really interesting because, it could change, right? I'm not going to say that,
Yeah, there's a risk, right? You go into the
yeah,
direction.
it is a risk, but like at least at a minimum, that they're not diluting their operating margins by having this international growth. And that actually historically it's been more profitable for them to scale outside of the US because they don't have to bear the same insurance costs. And I mean, not to like prematurely pull the AI conversation or the autonomous vehicle conversation up, but the way I think about Uber is like I said, 70% of their business immediately goes to cost of goods sold, which is not common for big tech companies, right? The big tech companies in Silicon Valley, we're used to them essentially having almost 100% gross profit. I mean, maybe 90% gross profit, but there's almost no, cost of goods sold for these businesses. And that's why structurally Uber looked like just such a terrible business because it was being marketed as, a big tech company, but their costs are very much tethered to the real world. there's no incremental cost for selling another unit of Microsoft Office, for doing another Google search. But every time you order an Uber, a real person in a real vehicle paying auto insurance costs and earning a commission on the ride has to come out and effectively pick you up. And so that's where the autonomous vehicle thing starts to get really interesting because obviously if they outsourced 100% of their riders to autonomous vehicles, you're talking about not having to pay human intermediaries, and assuming that autonomous vehicles are basically safer than human drivers. In theory, the insurance costs should be structurally lower. And so, it's really anyone's guess of how ridiculously bullish you want to get on Uber. But if you're imagining that, the variable cost structure of their business could
Right.
fundamentally change to almost more of a fixed cost structure, that just creates so much more room for them to expand. And, we'll talk about it more, I'm sure. But I don't think they're going to go to a 100% autonomous vehicle fleet. But if 5-10% of the business, especially in the US, which is where the unit economics are actually typically the worst, if they can cut out human drivers and let's say cut insurance costs in half because the Waymos that they're using are statistically insurers find them to be much 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 safer, and then the premiums come down, that could shave a couple percentage points of costs off the gross profit line or off the operating margin line for the entire enterprise. And so, this is a company right now operating at 7% operating margins, give or take. And so even just those kind of little things like that really, on top of the continued scale that they're earning, make me think that this is a company that could realistically in the next 5 to 7 years, I don't think it's crazy to say that they could double or triple their operating margins, right? This was a company that had negative 30-40% operating margins just a few years ago. And then within that period, they've completely swung the pendulum to the other side. And now I think it's pedal to the metal. I also think the other thing too is I think that they, when they were in this grow at all costs, where they're just trying to soak up as much market share as possible, they were suppressing their pricing power. I don't really have data to show this, but intuitively as a customer, I tend to believe that I would actually probably be willing to pay a higher price for Ubers than I typically do. Even going back to, like the drunk driving conversation. If you are out with your friends and you're 45 minutes from your house and you're at a bar and you've had 8 drinks, there's no scenario where there's no alternative. A lot of cities in the US don't have good metro systems and other, alternative travel systems. And so it's like, if Uber says the cost is $20 or $30, especially if you're intoxicated and thinking differently. I mean, the point being, you'll probably, if you want to get home in the next 30 minutes and you've been out all night and you've been partying, you've had fun, and you're ready to just be in your bed as soon as possible, that to me is a very inelastic demand. And I think people would pay much higher prices than they do. And I also think Uber knows that, but they've been focused on soaking up market share from Lyft and from other competitors around the world. And so while they're doing that, it doesn't necessarily make sense to jack up prices. And I don't think they need to jack up prices dramatically. But even if they just go, you increase the pricing, by 10%. And so that 2 a.m. Uber goes from $20 to $22. To most consumers in the US, in kind of middle to upper middle income areas, I mean, that's a rounding error in cost, but that's a 10% increase in revenues for Uber that is almost effectively dropping entirely to the bottom line, especially if it's with an autonomous vehicle instead of a human driver, where there's not the same variable cost component of directly having to pay the driver for completing that ride and them getting a percentage of the gross booking total. So, I mean, there's just so many. I could talk for an hour about all the different ways that I think like their business is going to expand. I think,
well, just insurance wise, I mean, I want to understand that because I do think, look, autonomous vehicles are going to have insurance in some way, shape, or form. But why? I guess if I'm an Uber driver, I have to have insurance because I just own a car. So then, what does Uber have to add on top of that? Is it like a supplemental insurance? What is this insurance that they're doing?
Yeah, I think it's like $1 million in damage and like property and like medical insurance essentially that they provide.
As a rider, if they get into a wreck, right, and you have to go to the hospital and get your leg fixed or whatever, Uber's paying for that, right? Your medical would not be. I mean, my understanding is that you're completely covered as a rider from the time you get in the car to the time you leave, but I might be wrong on that.
No, I think that's right. And then in terms of, from the driver perspective, my understanding is that when they're working as contractors for Uber, it's effectively Uber's insurance policy that they provide that becomes the primary policy. So they have to have their own insurance just to drive their vehicle personally. And
Yeah.
then when they go onto the Uber network and basically clock in for work, then they're on Uber's insurance. And so Uber is very much taking that risk, at least in the US.
Got it.
Donnie,
Got it.
should we? I know. Look, autonomous vehicles is like the thing here.
Well, let me just ask you. I mean, after you asked Shawn that, I mean, I guess right
Transition
now
to
the
that.
bear case, the bull case, I think is if you're to kind of, I think of it as like a push forward case, is that the network effect scales, they have latent value and latent pricing power that they could eventually pull that lever on, and then they have supplemental and driving revenue in the form of membership and then advertising, which we haven't broached, but I know that's one of your, is that kind of the bull case? I know there's eats, freight, I think you would kind of put aside. I think, is that like a very quick and easy summary of the O'Malley bull case?
Yeah, I think that's a pretty good summary of it.
Yeah.
But I think
Okay.
that, like from a unit economic perspective, I mean, that the advertising point is incredibly important to focus on. And,
Well,
they're really just started to touch on the advertising business, but, advertising is structurally much, much higher margin, obviously, than, ride hailing.
Well, it's the question. When it inflected in whatever year I said, 23 or 2 or whatever it was, without advertising kicking in, would it have inflected the way it did? My guess is no, because the ad just drops that just drops straight down, right, to the operating line for the most part.
Yeah.
I mean, because take rates have improved and all that. How much of that is just the advertising component? And then also, Shawn, how much do you think the ad business can grow? Because it seems like there's a pretty sizable opportunity there from an advertising perspective.
Yeah. No, I mean, I do think a significant, percentage of the improvement in margins is definitely attributable to advertising. And I mean, I think it's a huge opportunity. Just again, I like to use very intuitive, basic frameworks to think about things. And I tend to think without being an expert on advertising. I know Donnie's gone pretty deep on on digital advertising before.
Yeah.
You're an expert.
But intuitively, I tend to think that it's very valuable to know in real time where people are, what they're doing, what their driving habits are. And I think that's a huge addressable opportunity in terms of, so just like to give a tangible example, the most popular use case of Uber is actually to commute to work, which I actually didn't think of. I honestly, if you'd asked me, I would have said either commuting to the airport or like picking people up after a night out drinking. But it turns out in a lot of areas, the most common way to use Uber is actually to help with commuting to and from work in places like New York City, for example. And so you can imagine that within the Uber app, advertisers might want to leverage the Uber mobility, the ride hailing, and then the Uber Eats side. So imagine Chipotle. They know every day, they can see from the data that Uber provides, every day you commute for 15 minutes from your home to your office. And during that time, they can show you ads at 9 a.m. for Chipotle burritos that plant the seed of what you'll want to have for lunch. And then
Right.
4 hours later in the office, you're thinking, what do I want for lunch? Oh God, I've been thinking about that Chipotle burrito all morning. I want to order Chipotle. And then maybe you're an Uber One member who pays, $10 a month, which, might not feel like that big of a cost, but now you're getting free delivery and you're getting, Chipotle dropped off at your door that you ordered through Uber Eats. And so basically you have, you're seeing Uber expand significantly, almost a role in people's lives from, not just being the thing that you take, back and forth after a night out drinking or to the airport, but now, there's an opportunity to integrate ads into your daily commute. And you can imagine that would be very, very valuable for these advertisers that are, bidding for your attention on, let's say, Uber Eats, and now wanting to leverage the advertising opportunity on Uber. So I just, like I said, intuitively, I just think the market opportunity is huge. I don't even know how to quantify it. If they see you're going for the airport, a local business could serve you an ad for a massage or a neck pillow. Or you're some of the other interesting things that they've done is like Donnie, I know your kids aren't teenagers, but there's like the Uber Teen app too. This is another big opportunity for them of basically like parents in real time can safely monitor their children as they get picked up in an Uber. And so that's another opportunity where it's like, you have a two-parent household where both spouses are working full time. They can't pick up Johnny from soccer practice. Maybe they don't trust anybody or have relationships with folks on the team who can be part of a carpool, but they need to get Johnny to practice or pick Johnny up from practice. And now, through the Uber Teen, offering that they have, they can monitor in real time, where their child is, have safety guarantees and such. And so that, to me, that's the really interesting thing is the deeper I dug into the Uber story, the more I just found all these areas where I was like, yeah, well, of course, like the Uber teenager, I remember my parents spent dozens and dozens of hours driving me to and from sports practice. I bet there's, a percentage of the population that would pay a premium to book rides for their teenagers just so they don't have to be the ones constantly, shuttling them from practice. And so that's a huge market opportunity. And then just like what we talked about with, the advertising opportunity, knowing where people are in real time and being able to serve ads accordingly, and also being able maybe to leverage Uber Eats as this kind of broader advertising ecosystem. That strikes me as a huge opportunity.
Yeah.
And then, you talk about the insurance and the autonomous vehicles, where, the interesting thing with autonomous vehicles is that they've actually seen, there's a novelty to it. People are hesitant to book. Waymo has a partnership with Uber for context where, last time I was in Austin, I saw this. You could go on the Uber app and you could order a Waymo, self-driving vehicle to come and pick you up. And basically, when people first see this offering, Uber has the data that says that most people are hesitant. Then maybe the first time they see it, they pass and they do a regular human driver. And the second time they say, I'll try an autonomous driver. And then they get in the vehicle and the experience goes so smoothly, is so painless that they're actually willing to pay a premium in the future for an autonomous vehicle ride. And so to me, that's another really interesting angle here where, not only could you dramatically reduce 70% of the business's cost structure by, incorporating on the margins more autonomous vehicle rides, but actually users might pay a premium because they say, I get in the car and I have to make small talk with this person, or, like there's just a tension, like you're in there with another human being and it's just hard to totally relax.
God forbid.
Maybe there's a safety concern, right? You don't want a stranger picking up Johnny from soccer practice, but if it's an autonomous vehicle that is statistically safer and there's no human component to it,
right?
Again, you can just for me, earlier I told you guys that I consider myself to be a little bit more poet than quant. I used to do creative, writing in high school. I'm seeing all these moving parts where I'm like, holy cow, the Uber Teen connects to the autonomous vehicles, and then there's the advertising opportunity. And I just see, I'm not somebody who believes as much in rigorously valuing or modeling specifically what you think will have in the numbers. But intuitively, if I can plausibly do enough modeling to say, there's a chance here where the operating margins could double or triple while the top line is compounding at a double-digit percentage, and they're buying back billions of dollars in free cash flow every year. And on the next, market sell-off, I can get it at 30 times operating earnings. I don't think you have to be Warren Buffett or a rocket scientist to say that's a bet I'm willing to put 5% of my portfolio on, for example.
Okay, so let's do this. I'm just going to make a statement. I'm not saying I agree with this, but I'm just, I'm going to throw some catnip out there to start the autonomous vehicle conversation. And so pretend I'm, pretty bearish investor for whatever reason. Maybe I don't know a lot. And I come to you, Shawn, and I say, look, if Waymo can make self-driving cars, if Tesla can make self-driving cars, they can't make a ride-sharing app? It just seems like they could easily do that, and why share any of that with Uber? Now, I know that might be a naive perspective, but if that is kind of the bear case on how they could be displaced, what is the bull response to that kind of idea that literally they've got a good thing going right now, but we all know that 80% of a stock's value comes from the terminal value, and if the terminal value potentially has a bullseye on it, is there a problem where the market might have a hard time getting behind the stock if there's this constant worry that they could be completely replaced by Waymo or by the robo-taxis that Elon Musk is trying to get on the road?
Yeah. Well, so to me, that was really where I had the light bulb moment of feeling like Uber was materially undervalued today because there is that terminal value uncertainty kind of lingering over the company, that I think a lot of people plausibly can kind of go through the exact same thought process that you just went through, Jeff, and then say, too hard pile, I don't want to own it, sell it, whatever it is, and kind of write it off. But I think the example you use really dramatically understates the complexity and difficulty of being, a demand aggregator, right? I mean, Uber is a logistics company as much as any. So you could also say, why doesn't a competitor come along and offer 1-day delivery across the entire US and, beat Amazon? It's one of those things that's just easier said than done. Uber, to that brand trust and consistency and reliability. For a decade of my life now, every time I've ordered an Uber, I've had a fine experience. I've been picked up. I got where I needed to go. I paid a reasonable price. It's been consistent. It's been reliable. And I can trust it. And so, you could talk about that. You could say like that brand trust is really materially valuable, but then also just having the data on what 170 million monthly users are doing every month. That is immensely valuable and basically being able to plug into their system and route vehicles and drivers to the optimal location at a point in time to maximize their efficiency. There's real issues like that. How do you get 170 million people to trust this app? And so, like, for example, and use it, right? I think the advantage that Uber has is they are this like kind of neutral third-party marketplace where that they're optimizing as a customer. They're just trying to get you from where you need to be, from where you are to where you need to be as quickly as possible at the lowest price possible versus and they can have any type of driver, any human driver driving any type of vehicle or an autonomous vehicle get you from point A to point B. Whereas if you have a company that like is a vehicle manufacturer, first off, I mean, the cost structure is totally different. And also the incentives are different. Everything about it is different, right? So there's only so many numbers of Teslas in a city, for example. And some cities have a lot of Teslas. Some cities have almost no Teslas, right? I mean, you go to New York, you see a lot of Teslas. You go to other places, you go to Alabama, Georgia, you probably going to see dramatically less Teslas. With the point being, there's not a reliability in the saturation of the market, or of the supply on if you had a Tesla ride-hailing app. It can't be this universal product because it's not a neutral product. They're not a third party. They're a first party that is manufacturing vehicles and trying to get people to use the ride-hailing app. But if you go to New York and you say, oh yeah, the Tesla ride-hailing app works a little bit better here, but then when I go to London or I go to DC, I'm just using Uber. I think kind of to some extent the bet that I'm making is people revert to using the most trusted demand and supply aggregator that is the most reliable, the most consistent, and the most affordable. And right now Uber has the track record for that. And then there's another question of like with Tesla, for example, the business structure is different in the sense that, we talked about Uber being primarily a variable cost business, right? And that limits how much operating leverage they have.
Right.
But at the same time, they're not taking on a ton of balance sheet risk. They're not owning the underlying vehicles, right? Everybody who drives for Uber is a contractor, not an employee. And so you have this really flexible, demand responsive network effect where all of a sudden, an NFL game gets out and 100,000 people need a ride. You can have 10,000 drivers turn online and meet that temporary surge in demand. And so you have this fundamental imbalance where if you're a Tesla, you're producing the vehicles, so you're taking the balance sheet risk. So you're more of a fixed cost business than a variable cost business. And then secondly, there's some really interesting charts that Uber has provided on patterns in ride-hailing demand, where it's not linear. Like I said, you get these spikes at certain times of the day, morning and evening when people are commuting. Certain days of the week, the weekends have larger spikes than the weekdays, and then also after these like major sporting events. And so you have, like I said, these huge surges in demand. And the question is, if you're trying to create a network effect that is as reliable and consistent as Uber, but you're taking on all the balance sheet risk of producing and manufacturing and ensuring and operating the vehicles yourself, that is just, you have this imbalance of, during most of the time, let's say you had a fleet of 10,000, Waymos in a city, they're either going to be chronically underutilized or they're not going to be reliable enough at a peak surge in demand, because you might have 150,000 people demanding a ride at a moment in time. And so if you have this fixed vehicle fleet that can't flexibly, scale up and scale down to meet these surges in demand, like I said, you either have way too many, you have to have your vehicle fleet has to match peak demand in the city, which means that for 99% of the time, you're paying for a vehicle fleet to sit idly by, not being used productively, or you have to sacrifice your ability to be responsive to these peaks such that, you have enough vehicle fleet enough vehicles in your fleet to meet demand during, most hours of the day, but at peak times, it's a completely unreliable service. And then that's how I get back to, as a customer, if I can't use, the Waymo ride hailing app when I need it most, I'm just gonna find, one or two bad experiences is all I need to sour me and say I'm done with the Waymo ride hailing app. I'm just gonna use Uber, which is how I ultimately come back to thinking that I just don't think it's possible for a vehicle manufacturer to have the scale and the ability to aggregate demand, as well as a neutral marketplace like Uber has been able to do, and already has the inertia of being the first mover, and having all these people who trust and use the service. I just don't think that that can be easily replicated. I think, you can do that one city at a time. Waymo, if they devoted all their attention and resources, maybe they could take, they could bypass Uber and ride hailing demand in San Francisco. Now do that in San Jose, LA, Sacramento, Dallas, Austin, Fort Worth, Minneapolis, DC, every city across the country, and then do that across the entire globe. And I just think that's a lot harder to do. And then that doesn't even get into like the practical questions of autonomous vehicles, of like, these vehicles are primarily trained to operate on a couple cities in the US. Let's see how they do in Sao Paulo. When you have a Waymo fleet operating in Sao Paulo, in Tokyo, in Hong Kong, I just think that before we see that kind of thing at scale, that could be decades. That could be decades away. So, and then the last thing I'll say with the the Tesla point too, the kind of the counter argument to what I said is, okay, well, Tesla takes the robo-taxi model, so they're not entirely. They would probably have to produce XYZ number of vehicles to, basically counter, to have enough supply on their network to counter Uber. But also they could rely on their existing supply of Tesla vehicle owners who can, at their discretion, opt in and turn their car into an autonomous vehicle that drives around and picks people up. And like I said, I think the problem there is you just don't have the same density of Tesla owners in the, I can go to any small town in this country for the most part. This wasn't true a decade ago, but this is increasingly true today, and order an Uber. Because like I said, Uber is vehicle agnostic. Whether you drive a Camry or a Porsche, you can sign up for Uber and complete rides for people. Whereas, there are a lot of smaller cities in this country where a very small percentage of the population owns Teslas. So, if you're Tesla and you're trying to create this ubiquitous, trusted ride-hailing app that displaces, the very strong network effect that Uber has, I just don't know how you do that. And that's not even to say anything about the fact that we don't actually have, data at scale that shows that people are comfortable using their vehicles as taxis, as robo-taxis. With Airbnb, there was a genuine question when that business was scaling of whether people would be comfortable allowing strangers into their home, into a second bedroom, or into a guest house. And we have actually seen that people are comfortable with that. But I do think there's a difference. Like, we shouldn't just assume that they'll be comfortable with that with their vehicles, right? Most households have one or two vehicles in this country. And so what are you going to do? I don't necessarily plan out when I need my vehicle. Shoot, I need to go to the grocery store, or God forbid, there's an emergency. And if your Tesla robotaxi is on the other side of town, to me, that's a real logistical problem. And then, people sitting in your car, and then you can't keep personal items in there. There's just all these like subtle questions that I think that, I don't take it for granted that, like, at scale, we'll have millions of people who are willing to turn their cars into robotaxis for a little bit of passive income. And so when you add up all of these compounding factors, that's how I start to think about, I don't think the Teslas or the Waymos of the world can achieve the scale and the consistency and the reliability to match what Uber has been able to accomplish globally, to seriously displace Uber's business model, which is actually what makes me think that, if they want to, to continue to monetize these autonomous vehicles, the best way will just to plug into the existing Uber marketplace. If you're Waymo, rather than trying to, recreate Uber at scale, if you're just trying to monetize your fleet of vehicles profitably, and your focus is really on the hardware technology, right? I guess what I'm trying to say is it's incredibly difficult to be the best in the world at two things. Are you being the best in the world at, this vehicle hardware technology, or the best in the world at, software logistics for supply and demand aggregation and ride hailing? And if there's any company that could do it, it would probably be Alphabet. But until I really see evidence that they have made success on that, and it could be economically worthwhile for them to prioritize doing both at the same time, my default is to think that Waymo will continue to plug in its vehicles into the Uber network. You can order Ubers through Waymo. Waymo and implicitly Google and Alphabet get a commission on that or some kind of licensing fee. And that ends up, in theory, they'd love to take Uber's, market capitalization, their margin is their opportunity. But I just think in practice, I expect it to be a lot easier said than done. And until I see real traction and Uber actually losing market share, I don't personally find myself to be very concerned about that risk.
Donnie, I know
Yeah,
you're
I mean, there's
good.
I would have, man, I have the complete opposite view, in a lot of ways. I mean, first of all, I probably spent way too much time studying Google for reasons that you guys I've explained, and knowing how they operate. They're not very, the partnerships don't come very friendly, I think, in lots of cases, and what they get in data is, it's remarkable what they can get in data. And I think it's funny because a lot of the points you make that are very bull cases are, they almost like lend themselves to be super bearish. And so, like, one of the concerns, let's take this one, play out this one thought experiment. You said San Francisco, and Waymo was in San Francisco today with what, I don't know how many cars they have, of 300 or 800. Yeah, you might know better than I do. But I think one of the couple of points you mentioned are, one is Ubers are most utilized for work. And two, it's a premium experience to have no one in that car, right? So if I'm Waymo, I just want to dominate San Francisco for work hours, for all work hours and normal hours. Like, you win, fine, take all so I'm going to be your base load power, I think, is like you may have mentioned it. And you're going to be the guy who, when the natural gas generators need to come on, you're going to light them up. And Uber, you take that. And I think that still leaves a place for Uber. And I could see a world where Waymo says, we'll bid it out to you at Uber and Lyft, because our network is going to be stronger because we're Google. We have all of this. So yeah, we can't get a robo taxi for you in these search things, but it's going to be bid through Uber and Lyft. Like, I could see it going the other way. And if you're Uber and Lyft, you might just have to jump onto this, because this company they destroyed, I mean, a lot of companies in their pathway. So I get super concerned with that. And I think it's like the point that you're making about the work hours and also the premiumization of this AI, I mean, of the AV, is like what they see as an opportunity. Plus, you mentioned the advertising. I mean, for these guys, feeding the advertising and feeding the AI, like whatever that is, but
Yep.
just getting all this information on your behaviors of everything that you do and being able to feed that into these LLMs, that's a differentiator compared to what ChatGPT is. And I think the company that we're not even talking about is Amazon, which I think will do autonomous vehicles. I think there's going to be, I mean, it could be all these guys in some sense. I just don't see how they're going to, in the long term, allow a company like Uber to be that guard between them and you. Like, they want your data. They are after that. Like, they will take losses here to get more and more of your data to feed it into these other models. And that's how they become these multi-trillion-dollar businesses. Like, Amazon and Walmart are in this battle to the death. And if Amazon can just go and get this data and buy these autonomous and know where you're going, and you're plugging in to go to Walmart and saying, hey, actually, these items you might be buying, here's 1,000 ads that get you to go buy this on Amazon instead of buying it at Walmart. They have a lot of incentive to do that. So I think it just makes it tough. And I think where it becomes incredibly tough for the stock investor in Uber is, if you go and win, if Waymo wins San Francisco, Uber's hurt. I mean, it's got 5 cities that I think make up, like, 20-25% of the revenue.
Yep.
You lose one of those cities, I think as a stock investor, man, that multiple comes collapsing down very quickly. That would be my concern. I mean, I've obviously been burnt enough in stocks and followed Uber Google so much that I have probably too much PTSD on seeing how they've got into industries and sort of wrecked them completely, and left all these guys wondering, like, what happened. So maybe that's my own bias on, and I don't want to project that too much onto everything, but that's where I could see this thing breaking down on the AV side. And I think the AV, yeah, there's other reasons I think it'll even accelerate faster than we all think. And that's just we can get into that another time, but I do think they will start to see this pick up in the next 5 years quite a bit faster than in the
Alphabet's
past.
a scary competitor. Yeah, don't get me wrong. I would not want to underestimate Alphabet, which is why I say if any company in the world could destroy the Uber thesis, it probably would be an Alphabet or Amazon. And yeah, I mean that's a scary thing. I think that there's probably a lot of different businesses that they would you could imagine Alphabet wanting to to attack. I guess I'm not necessarily convinced yet.
Let me throw this one before you go too deep into it, because
Yeah,
there is one thing that's topical, which is Lyft. There's a lot of belief that Lyft just changed their shareholder structure. The co-founder and founder exchanged their whatever A shares or B shares for the opposite. And there's a lot of belief that maybe one of these guys actually takes them and picks them up to kind of
yeah.
accelerate this push. Is that something like, how do you put that in your calculus? Just thinking of these guys' ambitions, maybe.
Yeah, I think to me the most likely one would be DoorDash acquiring Lyft, and then they can leverage to basically for what Uber is in ride hailing, DoorDash is in food delivery, right? And
Right.
so Uber Eats is really the Lyft of food delivery, and they're using the Uber One and this kind of cross promotion to try and drive market share gains in Uber Eats. But yeah, DoorDash does not have to be a just kind of passively allow Uber to leverage the benefits of these two platforms to take market share against them. And so I do think, something I've thought about recently that I'm actually working on a podcast now about DoorDash. I do think it's plausible that they can buy Lyft. I think that you're a little late to the game and you're buying a company that's structurally unprofitable and then you're trying to, integrate it into your system. Again, I just think it's one of those things that's easier said than done. I think they could do it. I'm not sure that it's guaranteed to work out as well for them as it has for Uber, who has, been operating Uber Eats as an independent, as a subsidiary for, over a decade now and done so very effectively. And also, I think there's kind of an assumption there that the Waymo business model is profitable, or could be profitable. And I mean, I know everything we said about autonomous vehicles like boosting Uber's margins, but that's on the assumption that Uber isn't taking the balance sheet risk of manufacturing and owning these vehicle fleets. And so, it's above my pay grade and sophistication to be able to model out whether Waymo's business is going to be profitable. But I'll just say intuitively, if Uber took them a decade to reach a scale, or just by paying commissions to human drivers that worked as flexible contractors, if it took them that long to get profitable, I mean, what kind of scale would Waymo need to have such that they can actually, let's say, manufacture vehicles or create, like maybe it's $1,000 piece of hardware that they can strap onto any vehicle and make any vehicle an autonomous vehicle, whatever it is, you're in the tech hardware business. We have a mutual friend in Jeremy, and he pointed out Roku to me, and I learned about Roku. The tech hardware business is, by a lot of measures, just a really bad business,
Yeah.
right? They lose money on every Roku stick and TV that they manufacture. And so I have genuine questions about, again, whether it would be in, Alphabet's interest to try and scale Waymo to be this global ride hailing app if they're the ones at the forefront of scaling this fixed vehicle fleet and basically taking on the balance sheet risk. And I don't think we know. This is not me to say that under all circumstances Uber wins.
Yeah.
But it's really just like if we're talking about from the market is pricing in, where I think that it's kind of being taken as a foregone conclusion that Uber will be disrupted by Alphabet and its terminal value estimates are being severely impaired by that. Really, what I'm trying to say is the counter argument that I don't know to be certain, but is just I don't even think we know that Waymo can run this business profitably at scale. It's a completely different cost structure. So before I've already forfeit the market share gains that Uber has spent 15 years building because of like panicking about the autonomous vehicle threat, it's kind of just, to me, I'm just saying, like, take a deep breath and think like, okay, we don't actually even know if Waymo can do this profitably at scale. And once they show that they can do that, that's where I say I would start to change my view of the thesis. And then again, this is also a conversation about risk tolerance, right? I'm 26 years old. I'm very much in the wealth accumulation phase of my life, and so I'm very comfortable taking risky bets. And it's not lost to me that Uber could get totally disrupted and I could lose all my investment on it. And the income I make from working the next 40 years will more than offset that. If I was a retiree in the wealth protection phase of my life, I would probably have a very different feeling about the risk tolerance needed to buy into a company like Uber long term. But really, I'm looking at it. So I just think we have to be aware of like our position in life and when we think about investing. And so, like I said, for me, I have a very high risk tolerance. Um, and I'm looking at a company where I think the terminal value is being heavily discounted as if it's a foregone conclusion that Uber's business will get disrupted by these competitors. And just from a first principles perspective, like I said, I think there's some really just fundamental questions that need to be answered before I'm seriously worried about Uber, the terminal value of the business getting shaved off. I mean, it's very possible. I would say like with the Walmart and Amazon, for example, of course they're competing with each other, but Walmart and Amazon have still been great businesses to own. And so the market opportunity is so big there that there is room for two players. I wouldn't be surprised if we saw a version of the scenario, a version of the future where our relationship with ride hailing increases so dramatically such that people who used to order Ubers once a month are doing it once a week or once every 2 days because of all this excess supply of autonomous vehicles. It just becomes so ridiculously convenient. How could you not take a Waymo? How could you not take an Uber? With the point being, you could actually have, specific cities that maybe Waymo like nudges out and has majority market share over Uber. But if the total addressable market has increased so much that, people are just fundamentally like, part of the reason Universal Music Group and Spotify have become much better businesses in the last 20 years is because fundamentally people consume more music than they did in the 80s and 90s because the internet has made it easier than ever to consume more music. And so I guess what I'm trying to say is I think it'll be easier than ever to consume ride hailing. And again, this is not me saying that Uber wins and at all costs and there's no risk to Uber, but the really just the point is I could also imagine a version of the future where there is, like Waymo achieves a certain dominance in given cities. If it was one of those 5 cities you mentioned, I think it's like Sao Paulo, London, New York, Los Angeles, and maybe Chicago that are like the biggest for Uber. If they lost one of those core cities, I agree that would be very painful for them. But I'm also, like I said, I can imagine a version of reality that I think might not be factored into the bear cases that would argue for, shaving off estimates of Uber's terminal value is a scenario where we all use ride hailing much, much more frequently and the addressable market expands more quickly than almost Waymo can directly take market share from Uber. You can actually still have maybe Uber dominates the suburbs and small cities and Waymo dominates the major cities. I mean, I think these are all really interesting questions that we'll have answers to over the next 10, 15 years. But I guess the point that I'm trying to make is that I don't think all roads lead to Uber getting demolished, which when I speak to a lot of people, that is, I remember at the ValueX conference that you all host, I spoke to folks and talked to them about Uber, and it was kind of like that business is dead. It's not going to be, 10 years from now, it's not going to be, the same kind of company anymore. And I to me, just as I'm observing that as a customer and an investor, I'm just seeing, I think a lot of not like fully fleshed out, kind of visceral emotional reactions against Uber that, by being a podcast host, I've forced myself to kind of dig deeper into trying to do so objectively, that I've come to appreciate the stickiness of Uber's business much better than I otherwise would.
Yeah. No, I looked and there's the cone of uncertainty is wide these days on a lot of these and it's not just with, vehicles and AVs. I mean, with the LLMs and all the different, it's like all being a lawyer and accountant, like what's the outcome? Who knows? I mean, he could paint these pictures where they are just non-existent because you have AIs running them. So it's not just like this one singular argument. I think it's part of like a large framework of what the future is going to be. Yeah, I mean, I think on the very, with Uber, it's remarkable to see how disciplined the company has gotten over the last. And I think that was one that I had not. I mean, probably just from knowing the kind of more cowboyish early days of it, and then to seeing like where it's become today. And so, yeah, there is probably a lot of value to the fact that they have 170 whatever million people that use it. Like, what is that worth in terms of valuation today? So there's a lot, man. It's a good one. I think you guys did a very thorough job. And no, I
have one more question for Shawn on Uber.
Yeah.
Have you watched Super Pumped?
No.
Oh my God, it's a great show. You have to watch it. It's excellent.
Okay.
Yeah. Is it HBO? I think it's HBO. I think. Yeah, it's kind of the story of Uber.
Oh, okay.
What's his name plays Travis?
Kalanick.
Joseph Gordon-Levitt.
Yeah, I forgot the. It's really good. It's good. Yeah, it's a good show. So,
No, I need to go back and watch it.
yeah. It's about the early days, and he, no, it's very interesting. I won't give anything away because, well, we all know how it ends up, but no, it gets you inside the company, and I don't know how much is fiction versus fact, but I sure hell enjoyed watching it. So, for what it's worth. Okay, any follow up or final thoughts? I know we're an hour and 10 in. Donnie, any follow up? Any final questions?
No, I'd love to keep following the story along, and in May we're going to get hopefully another update for where we stand, and and I generally just really enjoyed the way your dynamic with your partner. I forgot his name. Ben? Daniel. Sorry. You guys have a great chemistry in what you guys are doing, and so I would encourage anyone to pick up the podcast, because I certainly learned a lot in a very short amount of time. I mean, I've been jumping on these LLMs with Jeff and I, and we can get these pretty good write-ups on AlphaSense, but the one that you guys did was also phenomenal to get up to speed quickly. So I appreciate that.
Well, I appreciate you saying that. Yeah, I mean, we put out all of our work for free, on the podcast and the newsletter. And I think maybe the last thing I'll mention on Uber is just, Donnie, I know that you've looked at Magnite and the trade desk. And I think fundamentally the question that comes back to Uber, as we're talking about, whether these AV companies like Tesla and Waymo are going to disrupt them, is, whether you genuinely believe that that having a neutral marketplace aggregator of supply and demand is a valuable service. And with the trade desk, for example, like they decided to be a demand side platform in programmatic advertising, believing that, basically having an intermediary that was focused on the demand side was what was necessary. It would create basically the best outcome for all parties involved. And that's, I think, the interesting question with Uber is, do you believe that fundamentally it makes sense to have a middleman in ride hailing or not? And, for all the reasons I talked about today, I think that there is a lot of value in having this kind of neutral intermediary, kind of like a booking.com, for example, too, if you've ever looked at that company, whose, their focus is just to get you from point A to point B. And, if you book with a single airline and then that flight gets delayed, they're not going to tell you that, JetBlue or Delta has a similar flight that you could hop on, if you run across the airport, right? But Booking will, because they're neutral. They don't care which airline you fly. They just want to get you to where you need to go. And so that's why I say, you have these interesting biases of, like, if you're the Tesla and Waymo, you're more like the airline, as opposed to being this neutral aggregator that is really just focused on the customer's best interest. So, I think where the thesis will be wrong is not necessarily anything to do with autonomous vehicles, but if I'm wrong that there is a need and a real value creation in having a third-party neutral aggregator of ride-hailing supply and demand, and whether that is something that could be taken over by a first party, I tend to believe that it can't, which is why I kind of say, prove me wrong, because I think the data of the last 15 years has showed that there is more value in the third party neutral aggregator, but that's really not, that can certainly change as technology changes.
I mean, I guess one of my final thoughts here is that I think eventually autonomous vehicles will be the future, but I've never believed this idea that it's going to happen quickly. I remember when I was doing my MBA, we had this guy come speak to our class. It was back in 2017. And man, he made a convincing argument that in like 3 or 4 years, none of us were going to be driving. Right. And I mean, at the time, I remember thinking like, yeah, he makes some good points, but it's such to give up control of your car. I mean, I used to own a Tesla, and the self-driving feature is great, but I mean, Shawn, you drove out to my house today. You know how windy that road is. There's no way in hell I'm going to I'm just not there yet to trust to let it drive, maybe in a city where it's more of a grid format or something. But I just don't think AVs are going to be like overnight. I think it's going to be a drip feed into the system. It's going to take a long time for people to get comfortable using them. It's going to take a long time for, on the regulatory side. And so in that sense, I don't think it makes sense for Waymo or Tesla to have their own network of these things, because they're probably not going to get, the utilization will be very small at first. So if you want to drip feed them into a system, which I think is probably the accurate way to predict how it's going to unfold, then to me it does make sense to partner with Uber, because it's like, well, slowly get people used to it, as you said, right? Oh, I could get a Uber X in 5 minutes, but I can we could do this autonomous. It's not very far, hell with it. Let's give it a shot. And if that's the case, then you kind of have a rollout that where it, partnering with Uber makes a lot of sense. And whether or not that gets to a point where it's 50, 60% AV, at that point, does the relationship between, say, Waymo and Uber, is it so ingrained that it just doesn't make sense, for Waymo to be like, well, the hell with it now, we're just going to do our own thing. So the other thing is, like, if it does take a long time to roll out, and if they partner with Uber for a long time, every time you get another announcement on a partnership in a city or whatever, that's going to give the market a little bit more faith that terminal value is not in some type of decline. And so, I mean, I could see a very realistic scenario where the stock continues, Uber stock, to grind higher as you get a drip feed of more positive information on the terminal value trajectory of the company. And so, I mean, I kind of came into this call not really, understanding, because Donnie and I talked last night, and I think he was probably a little bit more bearish. And I'm still not super bullish because I'm worried about this stuff, but I could definitely see a world where it makes a lot of sense. The partnership argument makes a lot of sense. But I can also see Donnie's point. Google is, I love the way you said it. They're not, they don't have a great history of partnering with people and creating mutual value. They tend to come in and look at a market and they dominate it, right? That's what they do. So I think the work that you've done, Shawn, is amazing. I think it's going to be a very interesting story and thesis to watch play out. But look, we're an hour and 17 minutes in, so I think I'm going to wrap it up. But thank you for coming out. Sorry we couldn't do the all around the dining room table thing. To the folks at home, I mean, yeah, you're looking at neophytes when it comes, or at least Donnie and myself, when it comes to doing the podcasting thing. But maybe at some point we will. But yeah, well, Shawn, thank you for your time. Donnie, great to see you as always. Yeah. And we will see everybody, I guess, on the next episode. And we're going to have quite a few interesting ones coming down the pipe. We've got some good speakers lined up. So please stay tuned. And all right. Thanks, everybody. Have a good day. Take care.
Thanks,
guys.
Thanks, Shawn.